Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. The policy choices Australia are making are likely to drive a long-term wedge between us. But first up today, we should note the overnight dairy auction. The most important point to note is that it wasn't negative. Prices rose 1.2% in US dollar terms and were up almost the same in New Zealand dollar terms. Leading the way was butter with a healthy 4.5% rise and a 9-month high. Whole milk powder prices also rose, up 2.1%. Other categories didn't fare so well, but these two were enough to bring the rise in overall prices. Perhaps the impact was blunted by low volumes on offer, just 20,000 tonnes, but that is almost 20% more than in April a year ago. And the ILO says that the pandemic is having a catastrophic impact on working hours and earnings globally. More than 200 million people have been thrown out of work so far, and more than 80% of workers have been affected in some significant way. That's more than 2.7 billion people. International credit ratings agency Fitch has downgraded all the main Australian banks, taking their AA- ratings to A+. It's done the same with their New Zealand subsidiaries. Fitch says unemployment will spike sharply and remain elevated relative to pre-pandemic levels even after the recovery is underway. And in climate news, the US government is reporting that global levels of methane keep on tracking up to new record levels, and essentially they don't know why. And there are now 1,160 COVID-19 cases identified in New Zealand, with another 54 new cases yesterday, but that was lower than the 67 increase the prior day. And Australia now has over 5,900 cases, 4,800 active. And while the rise in infection is slowing there, deaths are not, and now exceed 45. It appears Australia is planning to live with the disease rather than eradicate it. And if New Zealand does achieve eradication, that is likely to be a major impediment to normal relations between the two countries for a very long time. In Australia, and following New Zealand's lead, a banking regulator has written to all banks telling them to cut their dividends. And yesterday, the RBA held its policy positions in its regular rate review, but it did say it was expecting large increases in unemployment soon. The fear of that is spurring their federal government to talk about restarting their economy and moving out of their partial lockdown. And SME businesses hurt by the coronavirus economic downturn will be exempted from paying part of their rent and given at least 2 years to catch up. It is likely to cause pain for most property investors. The US Treasury 10-year yield has jumped again and is just on 0.74% and a 6 basis points rise in a day. Gold is down slightly today, dipping by $6 to $1,652 an ounce. And US oil prices are sharply lower again today, at just on $24 a barrel, another $1.54. The Brent benchmark is also lower at $32 a barrel. And the Kiwi dollar is still rising as the greenback fades, up another half cent to 59.9 US cents. On the cross rates, we're much softer at 96.7 Australian cents as the Aussie has risen more than us. And against the euro, we're holding at 55 euro cents. That means our trade-weighted index is at 66.5 and back to the same levels we had 2 weeks ago. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.